Now after April 23rd, the balance sheet is going to look like that. First 23rd April, the P&L statement is going to look like this. Now April 23rd of April, what is it? I find a statement only of April 30th. But there is a catch. Go back to the transaction related to April 17th. When the transaction related to April 17th, it says HRPO was used for delivered for modern barrels, that is the order to be processed and delivered on April 21st, and customer settled the balance immediately for the same, customer settled the balance for the same on the same day they received through RTGS. On the same day they received through RTGS. So what has happened? On 25th April, a transaction has taken place. What is the transaction? First of all, you utilize the raw material, you have sold it, then your revenue has occurred. Now what is the order from modern barrels? 12 tons of HRPO steel. 12 tons of HRPO steel. So what is it? Now in this particular case, I had 45 tons of HRPO steel, 25 tons are gone. Now I am reducing by 12 more tons in this particular case out there. So what is happening? In this particular case, I am reducing by 12 more tons because I am utilizing 12 tons of raw material in this particular case. I am utilizing 12 tons of raw material in this case. Utilize. Moment you have utilized, what has happened? Asset has come down, inventory has come down. What is happening? My expenditure, that is what do you call it as 12 tons of HRPO for modern barrels. For MB, I am just going to use the short form MB out here, and I am going to use the form HRPO out here. 12 tons of HRPO out there. What is the value? The value of this HRPO is 35,000 rupees per ton, and I have utilized it. I have utilized it, and that is what I see, reduction and utilize, first part of the transaction. Second part of the transaction, revenue occurred, sale to modern barrels, 12 ton at what is the price? At the price is barrel, 1 second, sale of HRP. I do not need to know the person to whom I sell because I am receiving cash. Sale of HRPO 12 ton at what do you call it as 12 ton at 39,000. Am I right? $39,000 per ton. 12 tons add $39 per ton. That is the money, that is the thing I have sold, 39,000 into 12 tons, and this is the revenue that I have generated. For the expenditure part, what happened? Your inventory went down, expenditure increased. For the revenue part, revenue has come in. Then what has happened? Either cash has to increase or receivables has to increase out there. Cash has to increase or receivable has to increase. It says they settle the balance immediately. They settle the balance immediately through RTGS. The RTGS, when they settle the balance immediately, what happens? My bank balance will increase. My bank balance, will it increase by this? My bank balance will increase by this minus the advance what they have given me. Minus the advance what they have given me. Minus the advance what they have given me, and then the advance what is there is not an advance anymore. The advance is not an advance anymore. The advance is adjusted again as what do you call it as the sale that you have made. So the advance is not an advance anymore in this particular case out there. The advance is not an advance out here. I received an advance. So what happens? Complicated. More than 2 heads. Minimum 2 heads. That is what I said. More than 2 heads. Hey, what happened? My revenue has increased, that is what I saw here. My bank account is increased, that is what I saw here. My bank account increase is not exactly to the equal to the revenue, it is less than that. Why is it less than that? I had received an advance. So what happens? I move that. Now the advance, it is not an advance, it is my money. Advance is their money. Now it has become my money. Now once it has become my money, I move it to what is called as, I remove it from what is called as a liability. It is not a liability anymore in this particular case, and that is what happens. Now April 23rd, sorry, this is on April 25th, I am sorry, this is on April 25th, I am sorry, this is on April 25th, and this from the 1st to April 25th out there, and April 25th, this is how your balance sheet is going to look like, and this is how your revenue statement is going to look like. Next we look at April 25th transaction, sorry 26th transaction, I am sorry, April 26th transaction out there. 26, no? 25 it was. Now after April 25, there is one more statement on the April 26th. What does it say? It says that withdrew from bank to meet the cash expenditure rupees 10 lakhs. That means what is happening? Your bank balance, basically I am just going to introduce one more row out here, I am just going to insert a row out here. In this particular case I am going to say, now what is happening? There is a cash balance which is also your asset. What is the asset? Cash is 10 lakhs. Cash is basically 10 lakhs out there. How is it coming? From the bank it is coming. So what is happening to the bank balance? Bank balance is reduced. Bank balance are reduced by 10 lakhs out there. My cash has increased by 10 lakhs. My cash has increased by 10 lakhs. My bank balance are reduced by 10 lakhs out there. Okay. Now we move to the last transaction. That is as of last day, that is as of April 30th, and in this particular case I will say income statement for the month of April. That means for the entire month of April, that is what we will say, for the entire month of April, that is what we will say. Now I move to the last statement for the month of April, I move to April 30th out there, I move to April 30th, and income statement I would say for the month of April. That means the entire month of April out there, 1st April to 30th April, how does it look like? Yeah. Income statement, I agree. Yeah, income statement from, for the month of April. I am sorry, for the month of April. Thank you, Suhail. Now what does it look like? April 30th. April salaries were credited to employees and directors. First let us say, moment all these salaries, expenditure, director salary. What are the director salary? Go back to the statement number 1 on April 1st. It says the director salary amounted to about $70,000 each. So 70,000 rupees each, 70,000 into 2 fellows, so 140,000. One side expenditure occurred, the other side what happens immediately? You are paid. When you are paid, what happens? My bank balance will basically go down. Why go down by how much? Go down by this amount out there. Sorry, is the balance sheet balancing? Go back and see. The balance sheet will always balance. It will always sit tight. So what is happening? Expenditure is increased, asset is reducing. It also said paid salaries to all the employees. Let us look at this. All the employees out there. That is what it says. The 4 employees, the 4 employees for manual labor were paid in cash. That means the rest of all were paid through bank account. Let us read who are the employees out there. An accountant and a stock manager were transferred at the monthly salary of 20,000 each. So what happens? Accountants salary, stock managers salary at how much? 20,000 each. Now 20,000 each. When you pay salaries, what is happening? Your bank balance is reducing by so much. Your bank balance is reducing. So, what are the two heads getting affected? One is the expenditure, other is the asset head that is getting affected. Next, two foremen for operating the machines at 15,000 per month. Also hired two foremen for operating both the machines at 15,000 per month. So, two foremen, that is two fellows into 15,000, 30,000 out there. Then what happens? Moment expenditure occurs, my bank balance reduces. Next, a shed manager with a monthly salary of 20,000 per month, watchman salary is set at 8,000 per month. What do you call it? A shed manager, watchman salary 20 and 8. So, what happened? This 20,000 and this is about 8,000 out there, and the same amount will keep getting reduced from the cash balance out here. What we have? Bank balance, I am sorry, bank balance what we have. Then what happens? Because when you pay salary, they have performed the work, that is what you are paying salary, you are not giving them advance. So, it is an expenditure for the month of April. When it is an expenditure for the month of April, it is an expenditure increases, my asset, that is the cash, goes down out there. If I have to pay, I am not yet paid, my liability would increase. Cash would not be affected, but my liability basically would increase in that particular case out there. Now, it further says 4 employees of manual labor were paid in cash. Cash means was manual labor. 4 employees, each one is getting paid 8,000, $32,000 basically gets paid in cash out there. That means when it gets paid in cash, what happens? Your cash balance, which was 10 lakhs, has reduced by 32,000 out there. An expenditure is increased and asset has reduced. Further it says, petty cash expenses amounted to 5,780 settled in cash. So, petty expenses 5,750. Now, petty expenses, basically petty expenses means what? Small, what do you call it as cash expenditures. Paid for in cash. When it is paid for in cash, what happens? 5,750. My cash balance comes down further. 780. I am sorry. It is not 5,750. It is 5,780. I am sorry. Thanks for correcting, Suhail. 5,780 in this case, and then it is 5,780. Okay. Now it says electricity bill 22,500 paid through check. So, expenditure electricity bill it is 22,500 paid through check. That means it is, first of all, it is an expenditure. So, let us write that as an expenditure. It is an expenditure, let us write it as an expenditure, but paid through check. When you pay through check, what happens? My bank balance goes down. My bank balance basically goes down, and that is what you see here in this particular case. That is what you see in this case out there as of April 30th. The presumption is the electricity bill is paid for the consumption of electricity only for your business. It is not for your personal electricity consumption, it is pertaining to your business. For your business electricity consumption, for your business you are paying the electricity fee, and that is what is 22,500. Now, I have the next statement on April 30th. It is not ending. Loan interest payment made to ICICI Bank for the month of April 2020. Rent for the month of April debited for factory shed. Debited. What happens? Debited means to the bank account. Rent for the month of April for the month of April, rent for the month of April. What is the rent for the month of April? Let us go back and see. What is the rent? Rent, I mean, you hired a space at a monthly rent of something, whatever it is. Let me just go through this. I had a factory shed at a monthly rent of 50,000 rupees per month, 50,000 monthly rent. Now what is happening? This rent is debited. Debited means what? My bank account, I am paying out of my bank account, and what is the amount of money that I am paying from my bank account? This is the money that I am paying from my bank account. Next, ICICI Bank loan interest. Of course, as expenditure, loan interest, monthly loan interest, monthly. Monthly loan interest. What is the interest? What is my principal? My principal is basically this is the principal. What is the interest? 11% is the interest. But this interest what you see is for an year. But what is the interest you are paying? You are paying for the month, 1 month out there. So I just divided by 12. Now 20,900 is the interest that I have paid. I am obviously reducing from my bank balance in this particular case. Obviously what happens? Expenditure increases, bank balance basically reduces in this case. Expenditure increases, bank balance reduces in this particular case out there. Now we want, this is, sorry, I didn't change the date. This is as of April 30th out there, as of April 30th, that is what it is, that is 1st to April 30th out there. This is all as of April 30th out there. This is the next edit you note down, one more edit, because that is all as of April 30th. Now one more aspect I missed, and I won't say I missed, but I won't enter. Now I want to close the books of the accounts on April. I want to say I am finalizing the books on of accounts on April. Is it ready as of April 30th? No, it is not ready. Because as of 30th of April, there are some more items. That is what has happened. There is something called depreciation. There is a value of the machinery that has reduced as of April for a month. Now you go back to the statements out there. They said 42 lakhs is the cost of the machine, and the life of the machinery would be depreciated over a period of about whatever 12 years with a salvage value of 44.8 lakhs. Now that I have talked about depreciation, there are two broad methods of depreciation which we use. Now that I have come to depreciation, there are two broad methods of depreciation we use. One is what we call it as a straight line method. The other way is what we call it as return down value method. This is also called as reducing balance method. Now what are these? Let's take an example out here. Supposing I purchase a machinery, I would say I purchase a machinery, I purchase what is called as a machinery for rupees 10 lakhs on okay, not at, on, I would say it's on 1st January 2010, and I estimate the scrap value at the end to be at about 1 lakh. Life of the machine, life is 10 years. That means what is happening? 10 lakhs minus 1 lakh, 9 lakhs worth of that machine, I am going to use it in a period of 10 years out there. 9 lakhs worth of that machine, I am going to use it in a period of about 10 years out there. That means on an average per year, what is the value of the machine that I am going to utilize? The value of the machine that I am going to utilize is 10 lakhs minus 1 lakh divided by 10 out there. That means per year it is going to be about 90,000. So what is happening? From the year 2000 and at the end of the year 2010, end of 2010, whatever, for the next 10 years till about 2019, I am going to charge 90,000 as depreciation every year. Sorry, I am going to charge 90,000 as depreciation every year. So what is happening? My depreciation is straight line. It is reducing by the same amount every year till the life of the machine. That's all. So what is the value you depreciate? The value you depreciate is the value that you utilize. The value of the purchase minus the estimated scrap value. How do you make an estimate? You make an estimate, rough estimate. Now what is the other method? The other method is very simple. I am not worried about the scrap value, etc., out there. I say first year, year 1, my value of the machinery, that is beginning value, is 10 lakhs. My depreciation is at the rate of depreciation at 10%. My depreciation is 1 lakh. Now beginning value at the second year 9 lakhs, 10 lakh minus 1 lakh. Depreciation for the second year 90,000. Why? 10% of 9 lakhs. Beginning year value third year 8 lakh 10,000. Depreciation at the end of third year 81,000. Fourth year beginning value 8 lakh 10,000 minus 81,000. 8 lakh 10,000 minus 81,000, that is about 7 lakh 29,000. Now depreciation for the year 72,900. Now fifth year, what is the value of the machine? Value of the machine 7 lakh 29,000 minus 72,900. Yes, Risha, yes, Suhail. 56,100. Depreciation 65,610, 65,600 and so on. I am not going to draw the whole thing. So this method is called as reducing balance or written down value method. Now your tax laws allows you to follow one of these two methods for your depreciation calculation. One of these two methods. Can a company change from one method to other method? Yes, they can change from one method to other method, but not every year. They can change once in a while. When they change, they have to go back and recalculate the depreciation of the asset right from the year of purchase till that particular day and readjust for the gain or the loss what they would have incurred because of the change in the method. Readjust for the gain or the loss what they would have made because of the change in depreciation method. Now how is it? For example, let us see this. If I follow a straight line method, at the end of 3 years, what is the value, what is the amount I have depreciated? 90,000 into 3, that is 2,70,000 is what I have depreciated. The value of the asset is 10 lakh minus 2,70,000. 10 lakh minus 2,70,000, that is 7,30,000 at the end of 3 years. Now let us look at it at the end of 3 years. At the end of 3 years, the value of the machine is about 7,29,000. Beginning of the fourth year is end of the third year. End of the third year and beginning of the fourth year is 7,29,000. So, if I change over from straight line to the written down value method, I have overcharged 9,000 rupees depreciation if I in the written down in the straight line method, because how much did I charge? 2 lakh 70,000. Sorry, 7 lakh 30. I have overcharged 1,000. I am sorry. There, what is the value of the machine? 7 lakh 30. What is the depreciation I have charged? Depreciation I have charged is 2 lakh 70,000 in that case. In this particular case, if I had adopted a written down value method, what is the amount of depreciation I would have basically charged out there? The depreciation I would have charged is slightly more, 1,000 rupees more. It is not 2 lakh 70,000, it is 2 lakh 71,000. That is where it is depreciation I would have charged is 2 lakh 71,000. You can see that 1 lakh plus 90 plus 81,000. Because of the change in method, I have undercharged depreciation by doing the straight line method. So, I can write 1,000 rupees more in the current year because of undercharge of depreciation, and the disadvantage I have or the gain or the benefit what I could get in the current year. I repeat, I know that it is confusing. Let us take 3 years out. Let me take the end example. In the straight line method, at the end of 3 years, what is the depreciation? Amount of depreciation is 2 lakh. Amount of depreciation is what you call it as 2 lakh 70,000. Under the WDV method, at the end of 3 years, what is the depreciation? 2 lakh 71,000. Now, I am shifting from here to here. I am shifting from here to here. If I had shifted from here to here in the 4th year, when I drop a P&L statement, that is what is called as P&L, is the income and expenditure statement. I will say depreciation undercharged, depreciation undercharged because of change in method of depreciation 1,000 rupees. Because so what happens? This, in addition to the depreciation for the 4th year, I will also write what is called as I will also write what is called as the that 1,000 rupees what I have undercharged. Because of change in method of depreciation, that 1,000 rupees extra I will write as an expenditure. Can it happen the other way? Well, yes, it can happen the other way. If you change from here to there, I would say 1,000 rupees overcharged, then it will appear in the revenue side out there. That is all what happens. So, basically what happens? If we look at depreciation, there are 2 broad methods of depreciation we follow, straight line or written down value. In this particular case, for our example, we will follow only straight line method of depreciation. I am not getting into the written down value method of depreciation. I am getting into the straight line method of depreciation out there. Now, I come here in this particular case. Let us say depreciation, because I want to close the books in the month of April. I want to start afresh on May. So, I will say depreciation on what are 2 machines? Decoiling machine. Depreciation on the decoiling machine. What is the value of the machine? The value of the machine is 42 lakhs. What is the scrap value of the machine? The scrap value of the machine is 4.8 lakhs. What is the rate of depreciation? The rate of depreciation of this machine, or the useful life of the machine, is 12 years out there. So, what happens? Divided by 12. and this is what is for the entire year. I want to do it for only 1 month. So, I will again divide it by 12. So, what happens in this particular case? The depreciation in this particular case is about per month it depreciates by about 25,833. I am going to round it up, I am not going to keep decimals out here. So, what happens? The depreciation amount, that is the value of the machine, it was 42 lakhs, scrap value is 4 lakh 80. So, what is the amount that has to be depreciated? 42 lakh minus 4 lakh 80 has to be depreciated over how many years? 12 years. Why did I divide it by 12 again? Because I do not want a yearly depreciation, I want the monthly depreciation per month. I am doing it only for the month of April. So, for the month of April, this is how it will look like. For the month of April, this is what it will be look like. So, what happens on the 30th? What is the value of the machine? This machine had a value of 42 lakhs. Now, I have utilized, I have enjoyed the benefits, I have utilized the machine to this extent out there. So, what is the value of the machine? The value of the machine has also gone down. Will the balance sheet balance? Yes, the balance sheet will always balance. We will do one more case, it will be better. The decoiling machine, let us say depreciation on the decoiling machine. Shearing, it is not decoiling. Decoil, no, that is, okay, I think I made a small.
Decoiling is correct. Salvage value of rupees
4.8.
for decoding.
Shearing machine, I am sorry. I am sorry, depreciation on the shearing machine. Shearing machine out there, depreciation on the shearing machine. I am sorry for that error out there, that is all. Thanks for pointing it out. Now, what is the value of the shearing machine? Shearing machine value is about 15 lakhs, purchase price. What is the salvage value? The salvage value is 90,000. That means, what is it? The useful life of the machine is for 12 years. Again, I need to depreciate it, I need to what is called as divide it by 12 because I need a monthly factor out here in this particular case out there, I need a monthly, okay, I know where I have gone wrong, I just have to remove one parenthesis, yeah. I need a monthly factor out there. So, what happens? Per month the depreciation of that is about 9792. So, what happens? What is the value of the machinery? The value of the machinery is 15 lakhs. Now, that value as of 30th, I have enjoyed, I have utilized the machine, to this extent out there. So, what is happening? The value of the machine is only so much. Further, I will take one more aspect. There is office furniture which is bought for 1.5 lakhs. Useful life is 3 years. Now, I will say depreciation on office furniture. There is no salvage value indicated in this particular case. Please note, there is no salvage value indicated in this case. So, what is happening? 1,50,000. Useful life is 3 years. So, per year what is the depreciation? Now, I want it per month out there, that is all. I am just going to knock off the decimals out here, this case. So, what is the value of the office furniture out here? The value of the office furniture out there will basically reduce. That is what I said. What happens? It affects the asset, reduces the value of the asset out there as we are seeing, and then it increases the expenditure. Two heads out there. One head is asset which is getting affected, value reducing, an expenditure which is getting incurred in this particular case. So, what is happening? You have made a loss of about 200,972 or 2,972,000 out there. So, what is happening? The loss is borne by the capital project. Their capital basically was about 5 crores initially. Now the 5 crores capital has become 4 crore 97 lakhs 99,000. That means their net worth has reduced as of April 30th. As of April 30th, if I close my books of accounts, this is how my balance sheet and my income statement will beautifully look like. This is how my income statement will look like for the month of April, and this is how my profit and loss statement is going to look at, my balance sheet is going to look at for the month of April out there. We will do work for the month of May. Okay, in the next session we will do work for the month of May out there. Now we see that balance sheet as of the April 30th, this is how it look like. An income statement for the month of April. Sometimes I write April 1st to April 30th, it's actually for the month of April. You would have seen. This is how it basically looks like, and you may have ended up making a loss and so on and so forth. Now I will say, for the benefit of ease of understanding, I will write retained earnings for the month of April out. For the benefit of ease of understanding, I am just doing it for the ease of understanding out there, nothing else. I am just using for the ease of understanding out there and for the retained earnings for the month of April. Okay. Now why did I do this? Now I want to sort of, what do you call it as, I want to in this particular case, I want to sort of look at writing for preparing the same financial statements for the month of, what do you call it as, for the month of May also out there. As of April 30th, your balance sheet looks like this. Your income for the income and expenditure for the month of April was so much, and then you ended up making a loss of, what do you call it as, you ended up making a loss of you ended up making a loss of, what do you call it as, 200,000 and $972 out there. You ended up making a loss of about 200,000 972. Now we move on to the next. We move on to the month of May out there. Now I will say my income statement as of 1st of May, income statement of TR Steel as of May 1 out there, May 1. Now what happens? All these I am just going to delete it off, I am just going to delete it off out there because these are transactions pertaining to April. So I am beginning afresh for the month of May out here, and I will say balance sheet as of May 1st. Sir, income statement and expenditure you deleted everything, for balance sheet you are retaining the same thing. What is balance sheet? What I own and what I owe. April 30th I owned and owed so much, May 1st also I own and owe so much, so it remains. What is income statement? Transactions that have taken place for the month of April. Now I don't need, now I am in the month of May. April I know what is the profit or loss I made, I added it to what is called as the capital, and I know my capital is so much in this particular case out there, I know that. So basically that is all what I require in this particular case there. That is all what I require in this particular case out there. Now you might say, sir, balance sheet is not balancing. Don't worry about it. That is purely because many of the cells what I had basically coded in that particular case out there. I will just redo it, it will balance out there perfectly.